Hello investors and traders, today we'll speak about 3 dividend stock to buy right now. So let's start from the first stock for today. It's ABBVIE company with the ticker ABBVIE. So let's start from the technical analysis of the stock. We can see from the chart that here since the March 20 we had an increasing channel, so now we are trading in the lower border of this channel. It's a weekly time frame, and by the way, the RSI, the momentum indicator, is now 44, so telling us that now the stock already oversold, so it can be a nice point, moment to buy the stock. Let me tell a few words about this company. So ABBVIE Laboratories is a diversified healthcare conglomerate that offers about 2% dividend yield, and last December the company declared its 51 consecutive annual dividend raise. Despite a long history of annual dividend raises, the major healthcare company has been able to grow its payout a whopping more than 200% over the past decades. Its diagnostic businesses grew by leaps and bounds in the early days of the pandemic, thanks to a soaring demand for COVID-19 tests. But rapidly subsiding demand for the COVID testing caused ABBVIE total revenue stream to contract in 2022. Let's have a look on the fundamental parameters. So here we can see the total score is 92, is quite high mark, quite high rank, very high figure. So debt to EBITDA ratio is less than 3, interest coverage is 8, and Altman's score about 2. So of course it's not perfect, the financial position, but still if the interest coverage more than 5, I don't see any problems to with debt with interest payment. The profitability, you can see the gross margin about 70%, operating margin 31%, and net margin 23%. So nice efficiency and marginality for this company. And the last three-year growth rate of the EBITDA and revenue showed double digits, 14% and 35%. The valuation, now we can see that the PE ratio is about 20, but the forward future PE ratio is 12. So there is nice expectations of growth for this company, and the PS ratio, price per share, is about 4. So 4 for such marginality. Yeah, it's okay, because if we have marginality about 20, so fair value for this so fair value for such marginality of the PS can be about 5 6. Here it's 4.4, so I can say that it can be cheap. And of course the dividend yield now, where is it? Yeah, 4%. And pay attention that the company 3-year dividend growth rate is 13%. So very nice. The investors receive very nice dividend increasements. So of course ABBVIE, it's a huge company, more than 20 billion bucks, and dividend yield more than 4%. So I consider it as a nice dividend stock, to buy right now. The next stock is Diageo. So Diageo, it's a consumer non-durable company from the sector, and of course it's beverage. Its market cap is about 100 billion bucks, and dividend yield more than 2%. So if we'll check the chart, the daily chart, here we had an impulse, the first wave, the second, the third, the fourth, and the fifth. Usually the third is the largest wave in the impulse, so here it looks very organic. Now in a correction. By the way, now in traded at the same levels when we traded in the pre-pandemic period. So all this, let me check. All this grow more than 100%. Now is now we have a pullback in the chart, so maybe it can be considered nice moment to buy. By the way, the RSI tells us also that it can be a good moment. Let me check the Fibonacci Fibonacci levels, and I will tell you if it's okay or no. Yeah, usually after a correction we have the levels between 30% to 60, the correction happening here from the impulse. So now we already go to this area, so it now can be, if you like the stock, it can be a nice moments at least to watch it. The alcoholic beverage giant increased its net sales volume, profits, and several other metrics in last year. Over the course of the year, the firm reported 15 billion in revenues, a 21 increase on a year-to-year basis. These numbers highlight strengths in certain segments, particularly with the company's key brands such as Johnny Walker and Guinness. One advantage Diageo has is that it operates in a total beverage alcohol sector that has grown quickly over the last decade. Diageo is the leader in international spirits, which has grown faster than the total beverage alcohol sector, and Diageo anticipates sales growth in about 8% range for the next 3 years. The company also will continue to grow its premium tier spirits, which provide increasingly profitable growth considering their higher margins, and the dividend, which yields about 2%, is highly reliable and has increased every year since 2001. Let me check its fundamental parameters so we can see the dividend yield more than 2% now, the payout less than 50, and so less than half the company pays as dividends from its net income, so there is a place even to increase dividend payments. The marginality here is very stable, it's 23, 18, 24, and the last data is here similarly, by the way, and the last data is 24% and margin, it's even higher than ABBVIE. Yeah, so it's okay. And of course we can see that the revenue is really growing because a few it's not a quarter, it's half of the year. So for example, 3 years ago it was 8 million, now it's more than 11. So we can see that the net income, by the way, also showing us a nice growth. So all the parameters, yeah, it's really grow. It looks like a growth stock. I like the marginality, I like the growth of the income, of revenue, and let me pay attention to the expectations. Yes, the EPS, earning per share, expected to grow, not to make it double, but I think to show an increasement in 30% in the 4 year, and the revenue also. The analysts expect, yes, it's this sector of spirits, of beverage, is showing a nice growth last years. So why not? It can be a nice purchase to your portfolio. The PS ratio, price per share, now it's 4.7. By the way, in the pandemic lows it was 4. No, it was about 4, so not so expensive now. Now it's I think the last data for the last 8 years it was about 4, so now it's 4.7, so it's okay, because here we saw 2 years ago it was 6, 7, so now only 4. So yeah, for me, yeah, I can maybe I will add some shares to my portfolio. It looks like not expensive, high marginal, and stock that can pay you a nice performance in this year. And the last stock for today is CVS Healthcare Corporation. Its market cap more than 100 billion bucks, dividend yield about 3%. From the chart we can see that last 2 years it's traded in a range, now in the lower border of this range, so I think here it's nice possibility to buy. By the way, the RSI momentum indicator on the weekly time frame is 35. I think on the daily it can be even lower, Yes, the daily is 32. So now from the technical point of view, it can be a nice moment to buy this healthcare stock. So dividend growth investors should know that CVS Health paused its payout to complete a 69 billion acquisition of Ienta, a major manager of health insurance benefits that collects monthly premiums from around 35 billion people. CVS also owns a pharmacy benefits management business that has around 110 million plan members. Rather than rely on relatively under predictable retail operations, CVS Health has leveraged its enormous physical footprint to become a major player in the primary care space. Pharmaceutical companies get a lot of attention for high prices, but savvy healthcare investors know that primary care providers are responsible for such a larger portion of roughly more than 4 trillion bucks America spends on healthcare annually. And over the past 20 months, CVS Health met a dividend commitment using just 40% of its free cash flow. It generated that means that the company can easily afford to make big payout bumps over the next several years, and investors who buy the stock in February simply hold it an excellent chance to come out ahead over the long run. Let me have a look on its fundamental parameters. Yes, so the dividend yield about 3%, market cap quite big. I can tell it's a huge company. The here it was, by the way, on the annual basis in 2018 it was a loss, but then it's improved, and now last years the company show is continue to be profitable. First of all, it's very important, and the revenue, by the way, the revenue also showing a slight growth last 3 years, and the net income, by the way, also for these companies continue to grow. So for me it's a nice sign. So I think all these stocks, ABBVIE, Diageo and CVA's nice companies to at least consider to watch now. They all of them has a nice dividend payments, a nice potential to grow for this year. And if you like this video, of course, press the like button. In my channel I have a lot of videos about dividend stocks, stock market analysis, fundamental analysis, dividend income, portfolio construction, dividend portfolio. So don't forget to subscribe, and of course see you on the next time. Bye.